This conference will now be recorded.
Okay, everyone. So thank you for joining us. I'm going to go ahead and run through the questions that we had for this week. And we'll go from there. I don't think we'll be a super long time tonight, which is good because we're working on getting the annual packets out. And that's, those will be, mailed here before the end of May. But let me go ahead with the questions. We had two questions this week about the pool. I know there are, ongoing questions, about that. So, here is we actually had three questions this week about the pool. So here is the current status. Typically, we don't open the actual pool itself until Memorial Day weekend. So at this point, the pool is still closed. The hot tub, however, is open. And that was something new that we did this year, is we were able to keep the hot tub open throughout the winter season and extend the use of that, for the residents due to the change we made with electronic gates last year. So we will be discussing this at the board meeting on next Tuesday night. But we still have a shelter, we still have a limit in terms of social gatherings in the state, and that's set to 10. So the game plan, for the pool right now is to restrict pool capacity to 10 and to open the pool for lap swim and therapeutic swim only. The reason for that is that we don't have a feasible or economically feasible way to manage access, or to control access. In addition to that, there are some potential safety concerns, that are related to that, for which the association, could be liable, particularly as it relates to children. So we'll talk about that in more detail at the board meeting when I provide some recommendations to the board and some updates. But the plan would be to open Memorial Day weekend for lap swim and therapeutic use in the pool. However, the entire pool complex would have a use capacity set to 10. That's actually how we were able to keep the spa open, or the hot tub open, through even in the times of this COVID issue, is we were able to use that amenity in a way that was safe and compliant with social distancing. So typically, for example, the hot tub capacity is 10. We changed that to 4 because we're able to use that and have 4 people use that amenity while still maintaining social distance. Hot tub use obviously a little different than pool use, but like I said, we'll talk about that more next week at the board meeting when I provide some recommendations to the board. Okay, next question was regarding Lord of the Rings reading. That's something that I've been doing most days at noon. I have missed the last couple days because I've been caught up in meetings and working on a couple other things. So I do apologize for that. I expect to be back on schedule with that tomorrow, because I certainly am missing it and want to, even though I've read it, I think at least 25 times. I'm anxious to move on with the story because we've been stuck there for a couple days. But we'll, expectation is to get back to that tomorrow. Okay, this one is a set of 4 questions. Are we doing anything to help the restaurant and golf course to at least break even? Well, there's a couple points about that that I'd like to address. First one is we're not budgeted to break even, but to actually minimize the cost of having that amenity in our community. So I would like to point out that you would never open a restaurant in this community or a golf course in this community as a for-profit business. It would be a very silly business proposition, because there simply isn't the population density to support that. I think if we look historically at the space by the gas station that's been used for restaurants, nothing survives there. They don't make it. Same thing with Mama Lolly's, out at the front of the park. This just, if you were going to invest your time and effort and money to start a private business, either as a golf course or a restaurant, you would not do it here. And that is actually one of the reasons that we pay for that as a cost of our, as a cost to the homeowners, because it provides an amenity and a value to the community. That being said, we do budget and work to operate those amenities as cost effectively as possible. Okay, so to minimize the cost of having that amenity for the community. But the idea that it would be a break even, I think people need to get that out of their minds. It is not economically feasible for that to happen. And we're going to have an extended financial discussion about the restaurants at a town hall in the fall, because this does come up a lot and takes a lot of preparation to present that. But we'll be happy to share, the economic details of operating a restaurant and what what we're dealing with here in our community. But you end up basically dealing with some trade-offs, right? You can raise prices, but if you raise prices, then you have fewer people come. And if you have fewer people come, then your revenue goes down. And if your revenue goes down, your margin goes down and you actually make less money. So there is an actual prime spot, which we try to target and maximize, to maximize the use of the amenity. We want as many people in the community to use it as possible. And we try to set the price points there, so that it minimizes the cost of having that amenity available in the community. And we have done a number of things, related to that. So for example, with the golf course, we hired a replacement Marshall Lake golf course manager, just about a year and 3/4 ago, to take over a position that had been vacated. And we specifically focused on increasing play. We actually have increased play at the golf course nearly 15% in the time that I've been here, and that's been largely the result of that, the golf course manager, Ken Souza, working to do that. We also adjusted fee schedules last year. And we try to operate those amenities as cost effectively as possible. But I will share a couple pieces of information that might give you a little bit more input on that. So for example, in 2014, the cost to operate the golf course was $205,000. Okay, so 5 years ago it was $205,000. If that cost had just increased at 3%, remember we've got minimum wage going up, we got electricity costs going up, we got water costs going up, labor costs going up. So if you just took from 2014 and it went up by 3%, the cost increased by 3% a year, that meant last year it would have cost us $245,000 to operate the golf course. In fact, last year we came in slightly under budget, right about $190,000 to operate the golf course last year, which is about it's about $55,000 less, okay, than it would have been, okay, to operate it if it had kept increasing at pretty much the rate of local inflation. So we basically cut the cost of operating the golf course by 25% in terms of real dollars, over the last 5 years. And this is at a time when golf courses actually are, a lot of them are going out of business and are losing money. So if you look at it in the whole picture, you'll find that we are operating the golf course much more cost effectively than we were even 5 years ago. It's a little bit different at the moment, with the COVID-19 stuff going on. That introduces some uncertainty into our predictions and our forecasts and our budgets for next year. You guys will hear some more about that in the annual packets that go out next week. But But if you go back and look at the numbers historically, we actually operate the golf course more efficiently than we did 5 years ago. And actually the same thing is true of the restaurants. I'll give you a quick example of the Heron. So, this goes back a little bit before, this goes back before I was here and before the financial records I have in front of me right now. But, when Dave Pohl came back, we were operating at, actually Dave just walked in. So, hey, Dave, I'm on this Q&A call and I'm answering a question about the restaurants. When you came back, what was the revenue that we were doing at the Heron?
Just under 400,000.
Okay, and what was the cost?
The
What was the expense? How much did we spend?
the cost for the amenity was 385,000.
Okay, so when Dave came back, the cost was $385,000. Okay, for that year. Our budget, for this year is $210,000 as a cost. So we've actually operate the restaurant more efficiently and more cost effectively than we did before. And in fact, if you go back and look at the numbers from just a couple of years ago, the maximum cost in the last 5 years for operating the restaurant, like I said, when Dave got here, was what, 385 was the cost?
The previous year before.
Yeah, the previous year before Dave was here. And then the maximum cost, and what year was that, Dave?
Oh, gosh.
I know, right?
It was, well, I'm going into my 6th year. So, was that 14?
Okay, so 2014. So by 20,
I think.
all right. So by 20, I got this number here. So yeah, so by 2015, okay, the cost was down to $244,000. That was our actual cost to operate that restaurant in 2014. So a similar way to explain the golf course, because costs go up, right? So minimum wage, labor costs, electricity costs, food costs, all those things. So if you kept operating at the same level, that would have taken our cost to operate the Blue Heron at 3% increase each year to be $283,000 this year. Okay, but like I said, our budget actually was $211,000. Okay, so again, similar to the golf course, we are operating 25% more cost effectively in a real golf. This is just the Q&A, the nightly Q&A or the Tuesday Q&A session.
Oh, okay.
Right. So we've actually decreased in the last 5 years. The actual cost of operating the restaurant is 25% less than it was before in terms of real dollars.
Yeah, it's like $108 a year per homeowner.
Yeah, it's less than, yeah.
The Blue Heron, the Yosemite Grill, the event center, the pizza kitchen. It's about
And the cafe, yeah.
It's about 30 cents a day for this clubhouse amenity here. 30 cents a day is not a bad deal when you look at our menu pricing. And the $100 a year is also not a bad deal.
Right.
I'm a homeowner myself.
Right.
And I know I could come in here with a party of 4 and do that twice a year, and I would have more than recouped my $108 just in the savings on the bill.
Right. Not to mention the convenience of not having to drive somewhere and the cost of driving somewhere else and all of those things. Yeah. So I had mentioned before you walked in, Dave, that we don't, budget our amenities to make a profit. That if you were going to open a for-profit business, you would never do that in this community because the population density isn't there.
Hence why it's called an amenity.
Right. And so but we do manage the cost to make it as cost effective as possible.
Absolutely.
And we have done that. Like I went through the golf course as an example. It's 25% less costly to operate the golf course in terms of real dollars today than it was 5 years ago. And it's actually similar numbers for the, for the restaurants.
You bet.
So they operate, so it's a better value today than it was 5 years ago.
And we're always looking for ways to improve and to shore up that bottom line.
Yeah, absolutely. It's, may open a can of worms, but that was the part of the philosophy behind the Pizza Kitchen. The Pizza Kitchen, we're selling roughly 150 more pizzas a week. So about 630 more pizzas a month than we were before we had the Pizza Kitchen. Okay. And if they sell for more than $10, but just keep the math simple, that's $6,300 more a month in revenue. All right. And since pizza has low food costs and relatively low labor costs, we actually make out of that about 40 to 50%. It's a fair number, Dave, as an incremental contribution.
Yes.
So that means we make $2,500 to $3,000 a month of additional profit that we weren't making before. $3,000 a month times 12 months, $36,000. That paid for the Pizza Kitchen. And for the next 5 years, even if there was no inflation, nothing else that you're factoring in, that's $150,000 that we didn't have to get as reimbursement from homeowners. We would have had, because it's revenue that coming in, it reduced the cost of operating the food amenity. So that's one of the reasons we put it there.
Even if it didn't reduce the cost and it was flat right across the board, that whole project cost the homeowners a one-time, each homeowner $17.
Right.
Cost you $17 one time.
Right. And then we have a nice amenity, a nice additional food service in the park to make enhance and improve the community and what's available to the people here. So next question on this batch was, do we do any inventory audit on the restaurant, bar, and golf course by a disinterested party? We actually covered this in quite a bit of detail a few weeks ago when I described the difference between an audit and a financial review. Absolutely, we have a third-party certified public accounting company called Roser Accountancy that works with our staff, that reviews and prepares all of our financials, all of our annual financials. It prepares our taxes, and it does an audit. It doesn't do an audit because audit is a very formal process in the accounting world, but is intimately involved in all the details as a disinterested third-party review of our financial circumstances. So yes, that is done. Does the golf course manager have set hours, and what exactly is his job? Is he on the payroll? It seems that we are missing some opportunities to increase rounds of golf. It seems that it is a free-for-all at the course with no one to collect fees. So yes, the golf course manager does have set hours. He is scheduled to work 20 hours a week. And then we have other staff at the golf course as well. Golf marshals that are there to help ensure that play is smooth, to receive payment for people that are paying by the day or by the round. We did have a period of time in the first couple of weeks of this COVID-19 shutdown where we did not have golf course marshals on premise as a safety concern. But we did leave the golf course open, because we felt that we could do that safely and in compliance with social distancing. But keep in mind that many of the people that play on the golf course pay annual dues. So they don't pay on a per day or per round basis. So we did lose a little bit of revenue, potential revenue during that time. But we set up we set up a donation bucket because we didn't offer it for free, but we just didn't have a person there to collect it. But many people did pay for their rounds, and we actually did continue to collect money, during that time, even when there were not golf marshals present. But in terms of what exactly is his role, he coordinates the scheduling of the staff. He is a liaison with the golf course management company. He, reports to me and keeps me informed in terms of, what's going on. He handles the maintenance of the golf course in terms of, prioritizing, what gets done and communicating again with the golf course management company. This is actually something that I'm particularly proud of that we've accomplished since the time I've been here. We talked about how the golf course is less costly to run today than it was 5 years ago. But if you look at, the numbers, we actually, made a pretty significant improvement just in the last year, which we were on track to do in this budget year until the COVID-19 thing came, and that's, muddled the waters a little bit. But for example, we were, revenue last year, okay, at the golf course was $83,000. Projected revenue this year in our budget, which we were on track to hit, actually we were slightly ahead of it, was $95,000. So we actually increased revenue at the golf course roughly $12,000, which is, again, 15% just in that 1 year. I know I'm going through this in quite a bit of detail, but if you look at the numbers, if you look at it, at the whole picture, you find that we are operating things more cost effectively now than we were 5 years ago. And even in this last year, again, we increased the revenue at the golf course, 15%. So that reduces the cost to the association members to have that amenity available. How are annual bonuses calculated for businesses that are operating on subsidies from the homeowners? Well, first of all, I want to clarify this, that it's not a subsidy, okay? It is a cost. It's a cost to have that amenity. We're not subsidizing a losing business. We're paying to have something, and we get a value from it in return. Okay, so there's a lot of value to have a restaurant that is, 5 minutes from your house instead of having to drive 30 minutes or 45 minutes to go find someplace to have a meal. There's a lot of value in having a social gathering place that's really the hub and center of our community. That is a cost. It is not a subsidy. And, really we need to get out of this mind of thinking that we should operate these amenities as for-profit businesses. And again, we'll go through this in great detail in the fall. I'll do a town hall on it specifically. But as a businessman, I would never, ever, ever open these kinds of businesses here if I wanted to make a profit. The demographics just don't support it. And so we have to not look at it as a subsidy. We have to look at it as a cost, and what do we get in exchange? Okay, and is the cost worth it? Now that's a fair question to talk about. Is the cost worth it? And I think, in conversation with most of the homeowners, the large majority of the homeowners do believe that cost is worth it. Okay, so in terms of, in terms of bonuses, we do not have a formal bonus structure. But what we do report on is how that business performs against budget. Okay, and because we do manage it and we do run it cost effectively, like I said a little earlier, Heron operates with a much lower cost today than it did 5 years ago. The golf course operates with a much lower cost in terms of real dollars than it did 5 years ago, and a much smaller percentage of our overall budget. Okay, so hopefully that answers some of those questions. And like I said, we'll go through that in more detail at a town hall in the fall, because we do get a lot of questions about the restaurants and and looking at them as businesses versus looking at them as amenities. And but we're going to tackle that one in a different forum in a couple months. Okay, I got a couple other questions that came in right before this meeting, so I printed it out, and I'm I'm kind of reading through it as we go, but I'll give you answers to those. So are we able to get deliverables from HOA and YSPUC via digital platforms like email? I know we have to give written proof that we want that communication method per Davis Sterling. Yes, we are able to deliver some information via email and some information electronically. Not everything. You know, certain things are required to still be hand delivered, or not hand delivered, but mailed. Okay, and you know, there's a long list of what we can send electronically, what we cannot send electronically. But we really have actually tried to leverage electronic platforms quite significantly over the last 2 years with a revamp of the website, with a weekly newsletter that I think William has done. Gosh, I think he hasn't missed a week in like almost 8 years. I think it's pretty wild. And then we added a print newsletter into the water bill so that we could get more information out, that way. But yes, you can receive certain information in electronic form, but not all information. Where are we with solar battery feasibility for the HOA and YSPUC? That's an engineering committee function. Engineering committee has been on hiatus during this COVID-19 situation. So I'm gonna, defer that question for now because I don't have a current update. With the park receiving the Paycheck Protection Program, how does that affect the usual money that would go to payroll? Okay, that's a good question. Here's the thing with the PPP. PPP is absolutely one of the most complicated beasts that I have ever seen in my entire career. It seems pretty straightforward and it seems pretty simple. You apply, to the government for some assistance. You run through some numbers, they verify that, they give you assistance. Great, you got the money, let's go. It actually doesn't work exactly like that because the rules for that money to be forgiven are incredibly complex. And it wasn't actually until Friday of last week, just 3 days ago, that they actually, that the SBA actually published the formulas for how to calculate loan forgiveness. And let me tell you, it is mind-boggling complex. You have to keep track of hours per employee. You have to compare those hours per 3 different work periods. If the pay they received was reduced more than a certain amount, then you have to take a pro rata reduction of the amount of money that's qualified for forgiveness. You got to do that on a per employee basis. Then there are 3 safe harbors that apply against that, where if their compensation was different in prior months, in certain periods in prior months, then that doesn't apply. You do that calculation differently. Or if their job goes back up to full-time and full hours before June 30th, then all of the dollars that you paid them qualify. Just trust me, be glad you do not have to work and run these calculations. But also shortly after the PPP law was passed, our Treasury Secretary issued an interpretation that was not in the original law. And that was that 75% of those funds had to be spent on payroll. That actually was not in the CARES Act. And if you think about it, that's a little bit challenging, right? If you don't have customers, if you don't have business, how would a restaurant, for example, spend that money on wages when they weren't even open or they were operating at 25% capacity? So it's very, very complex. Next piece is that IRS got involved on the 30th of April and passed a ruling that, in my opinion, violates the intent of Congress, because Congress made it very clear that any PPP funds that were forgiven would not be taxable. So normally, if you have a loan and it is forgiven, then that is actually counted as income, okay, to the entity to the entity that receives that forgiveness, and you pay income tax on that. All right. So if we had a $200,000 loan and that was forgiven by the bank in normal circumstances, we would have to pay tax. That would count as $200,000 income, which we would have to pay tax on. Well, Congress specifically said PPP funds are not taxable even if they're forgiven. However, the IRS issued a preliminary ruling on April 30th that says, yes, the PPP funds are not taxable, but any business expenses that you spend PPP funds on, okay, that would normally be deductible are no longer deductible. And what do you normally deduct? Well, you deduct payroll, you deduct insurance costs, you deduct your business expenses, and you don't have to pay taxes on those because they're business expenses. But what the IRS has essentially done now is said any PPP money that you spend, you cannot now deduct those business expenses. Therefore, that will become taxable income. All right. Like I said, I think it violates the intent of Congress on this one. And hopefully that will get changed. But the point of all of this is, yes, we did get some PPP money, but we have it, other than an extremely rough guess, we do not know how much of it will be forgiven. We don't know if we're going to have to pay taxes on it. So yes, we'll end up being able to keep some of it for sure. But right now we just don't know. And so rather than put out numbers and have to change them and make that complicated, we're just saying, hey, we got PPP funds. That's great. We're going to do our best to maximize the amount of forgiveness we qualify for. We're going to do our best to continue to interpret the rules as they get, as they continue to get made. There are multiple questions that haven't even been answered yet about, how to account for some of these things. And then we have to go through the forgiveness process. And when that is all said and done, then we will know, how much PPP funds we actually ended up with. Okay. And then that would be a board determination and board decision of what we're going to do with those funds once, but until we know how much it is, we're kind of putting the cart before the horse, so to speak. All right. So one more question on this one was, I can see the pool is closed. Is the spa open? Yes, the hot tub is open. The pool is closed until Memorial Day, at which point it will be open with a maximum capacity of 10 people and open for therapeutic and lap swim. Okay, so those were the questions we had tonight. I will very briefly take any other questions or comments, but I do need to get back to working on the annual packets. So if there's anybody that's on the call that has a quick comment or a quick question or point of clarification, I'd be happy to address that if I can.
It's Preston here. Do we have an idea when the committees can be meeting again? Can we give them a go-to meeting or a Zoom or something so we can get all the committees up and going again?
That is subject to the chair of the committee. I would think that'd be a good question to submit to the committee chair. So, but I can't answer that one right now, Preston. But good question.
Okay. Well, yeah, I was just looking for guidance on how I can get connected with getting that answer. So yeah, thanks, John.
Yep. All right. Anybody else? All right. Either that means I talk so much I put everybody to sleep, or we did a good job covering the questions. So, but anyway, thanks everybody for joining us tonight. We'll continue to do this on a weekly basis. There's a board meeting next Tuesday, so we won't Q&A. We're going to have a formal Q&A session. We'll certainly answer any questions that are submitted to that email address and include that in the next round. Okay. All right, everybody. Thanks for joining us.
I have a question.
Okay.
Can I ask a question? Hi, Tracy. I sent in an email about the pool, and one of the questions in it was, are we going to be using the app to enter the pool this year? And are we going to have to pay again, was one of my questions. Could you answer that?
You know, you're right, and I'm sorry, that was absolutely part of your question, and I skipped right over that. So, well, the pool is on. Yes, we will use the app to enter the pool. Well, the pool capacity is limited. We're not gonna charge anything extra to use it. So we'll just
Okay, thank you.
from what was already there. So if you already had a pass, it will be extended.
Okay, thank you.
Yep. So, and thank you for bringing that up. I saw that in the questions, but I totally missed it when I was answering it on this call. So.
Okay, that's it. I appreciate everything you do.
All right. Anybody else have any other questions or points of clarification? All right, everybody. Well, have a great evening. You know, we got a little bit of rain and a little bit of water. I think that's probably the last one for the season, but it's supposed to be pretty dry and hot the rest of the year. So we'll be back to normal here pretty soon. All right. Thanks, everybody. I'll talk with you later.
Thank you.
Thanks, Sean. Bye.